Morning all. How are we doing? Hope you're all doing well. Welcome to the Flow Show. Good morning, K-Man.
Morning, Ryan. Morning, everybody.
How you doing, mate?
Yep, all good, all good.
Good
Markets
stuff.
moving, opportunities are there, traders are happy.
Yeah, not quite the quietness that you might expect this time of year. I suppose it's a sign of the times that there's more machine traders than human traders now, and machines don't take holidays.
Yeah, that's true.
But yeah, maybe they need to change their batteries now and again, some of them. Anyway, let's get cracking. Kick off in China, as we often do. They vow to meet their annual economic targets, according to reports via state radio. Maybe that means we're going to get some data fudging down the line. We shall see. There was a PBOC-backed paper out yesterday saying that expectations on the yuan FX rate are stable and that recent fluctuations are normal, and that yuan decline pressure will ease in the second half of this year, which is where we're at now. So maybe just indicating that they're not too worried about this move in dollar China, although they are still fighting it with a small fire hose. State banks were seen selling dollars during London and New York trading sessions this week. So they are stepping up the selling or keeping the pressure on, not letting the currency weaken too quickly, but they're not putting the entire handbrake on that just yet. So if it's going to go, it's going to be probably a bit of a grind higher from here on out. More stuff related to the investment firm or shadow bank, whatever you want to call it, Zhongji. They're going to plan some debt restructuring and have called in KPMG to assist with that. So again, they might be putting a little bit of a fix in on that. We'll get to see whether the state help out on that front as well. Coming over to Japan, and a bit of data out overnight. Start with the machinery orders. They were up, but not as much as expected. 2.7 versus 3.6 expected. Still a gain over the negative number seen last month. Year on year was a little bit worse, down 5.8%. Not as bad though as the prior month as well. Trade balance data was out, and as you can see, a little bit lower on the actual trade balance, or a little bit better, sorry, on the trade balance, not as bad. But looking at the activity components, how did imports and exports get on? Year on year, exports were down 0.3%. We're expected to fall more, so that's a bit of a plus, but it's still a negative number. Same for imports as well, not falling as much as expected, still worse than last month, but again, two negative numbers. You'd like to see the trade balance affected by positive numbers, would be exports outperforming imports. But again, like a lot of trade data we've seen from various countries, both are negative numbers, which suggests lower activity overall. The full trade balance, you can see they're coming in much worse as well. What do you make of those numbers, Kay? They're doing all right. Machine orders doing all right, but we know that trade balance has been a bit up and down, don't we?
Yeah, and the machinery orders as well, I was going to say.
Yeah.
It's a bit of a volatile one there, because sometimes you have like big orders coming through, because the Japanese, I don't know if everybody is aware of that, but the Japanese are heavy machinery makers for a bit around the globe, or at least Pan-Asia. So those orders can fluctuate quite a bit. The one thing that worries me, you already touched about it, is the lower activity. But also recall when the Q2 GDP came out, which overshot expectations, it was thanks to quite increased exports, and we are seeing the exports turn negative in July. So that's a bit of a bummer there going forward. So that's where I'm saying, like, do those Japanese numbers have much of an impact? Yesterday we saw the better GDP had absolutely zero impact. People were just buying dollars, and now those numbers are turning slightly negative again. The trade balance in itself, 78 billion yen is nothing, right? This call it virtually flat, but it's the activity that is still a bit worrying over there. And then we saw the foreign bond buying and the investments coming out. Those are not huge numbers, because we see the prior month we're talking about over 1 trillion yen. So you're talking about less than $3 billion in either one of them. So that is for the week ending, for the week ending last week, right? So those are numbers which are 5-6 days coming out afterwards, a bit like the CFTC or whatever data. So that number is not really great, but yeah, it's the activity. They need to get the activity rolling, and I would say they could run with a negative, even a big negative trade balance. But as long as as they can get those imports up, or the local activity up, then or big exports. Testifying of like the big manufacturers and the machinery makers doing very well, then you are going to get a better picture in Japan, even with a negative trade balance somewhere. So we need to get that activity up to start to get really positive about Japan.
Yeah, as Kay mentioned, we obviously had the GDP numbers, which wouldn't have included these July numbers. They would have been estimated. So if they estimated around there, then there should be unchanged in the revision. But if they're not, then we could see a slight downward move to the next GDP revised numbers. But that'll be creeping into old data anyway by the time we get those. Coming over to Aussie land, and looks like employment is taking a little bit of a hit. We've seen the unemployment rate up to 3.7%, a bit more than expected. The employment change was expected to rise 15k, and it fell pretty much 15k instead. Bit of a switch around in the full-time employment, part-time employment revolving door. Where's it got the part-time there? Am I missing it? Got the full-time change. The part-time change was up 9k versus prior, down 6.7k. As you can see there, full-time employment doing the most lifting in that one. The participation rate dipped as well, which shows you how bad the rise in unemployment rate is, because that you can, or usually can, take the unemployment rate down. So it's a bit of a double negative for that one in Aussie land. RBNZ4 was out again, saying the current level of rates is constraining inflation, and we are going through a necessary economic slowdown. Over to the ECB and Kazakhs, one of the hawks at the ECB says it's good news that inflation is slowing. Any additional interest rate hikes would be small, and he needs to see the new ECB forecasts before deciding on hikes. So one of the hawks going a little bit more neutral now as far as that goes, but like the rest of them, all data dependent. Norges Bank hiked its rate 25 pips to 4% as widely expected, and the statement said if the economy evolves as currently anticipated, the policy rate will be raised further in September. Anything significant out to the Norges, Kay?
Well, the last paragraph was talking about the Norwegian kroner. So if the Norwegian kroner weakens more or faster, that could impact the monetary policy. So at the time of publication, we were trading around you have the dollar Nokia.
You want the euro? You want the euro one?
Yeah, it's easier, right? The euro was around 11.52. Had a quick dip to sub 11.50, where the first support come in, and it's bouncing off it. Yeah, it's still Norwegian kroner is struggling. Well, we know it's been struggling, but it seems to get a bit worse here in the past this week actually, and what the Norges Bank did, okay, some were saying due to Norwegian krona weakness that they may have done a 50, but they are doing 25 and they're signaling another 25, still keeps them within the pack, let's say. They're at 4%, going into 4.25. People think that that will be the last quarter that they do, and that's not really to impress markets right now. So we're gradually weakening again in this Norwegian kroner. We're back above 10.55. There's I think it's a 50% of that move lower. Or let me just, I'll show it in a
Yeah, you can show it. Okay, no worries. Oh, let's give you that. Yeah, I'll let you show that one in a bit. Okay, coming back to the data and yesterday's stuff. MBA, another uplift in the rate, the effective rate there to 7.16%. Some chatter in the US press or amongst market players anyway that could see mortgage rates up to 8% if the stickiness continues, particularly in the way bond yields are going and obviously inflation as well. So keep an eye on that one because, you know, getting up to 8% mortgage rates is definitely going to start putting some pressure, at least on the housing market. But we've seen activity itself last week. Applications were down 0.8% versus a minus 3.1% last week. So it's not a big number in itself, but it's something to keep an eye on because it can give you a little indication on the trend in housing. Further housing data came out from Canada. As you can see there, housing starts beating expectations, although a little lower than expected. A little lower than previously. That was revised higher. US permits, building permits and housing starts a little bit mixed. Housing starts beat, but permits missed. No great red flags being waved there about those numbers. So everything's looking a-okay in the housing market on that side of things. Wholesale sales in Canada dropped 2.8%, not as bad as expected, but still a negative number. So just keep an eye again, looking at activity in a lot of countries, and those sort of numbers plays into that. Industrial production, surprise to the upside, coming in at 1% versus 0.3 expected. Capacity utilization, that's how much use factories and things are being used, rose to 79.3%, so another positive number. Manufacturing production up 0.5%, so more good news for the US. Coming on to Fed minutes. Now, I've got a bit of an issue with these Fed minutes because the market's been spinning this as pretty hawkish. So just to take the headlines from that, the wires reporting that inflation risks could require further tightening and that most Fed officials saw significant upside risk to inflation. Reuters reported the minutes as Fed policymakers divided in July over need for more rate hikes. Makes it sound like it was a big bum fight. There was only two who wanted rates to stay on hold. That was it, two. So not quite the bum fight the press are making out. I had to read through the minutes because, as I say, reading it all this morning, all the headlines, it made it sound like it was quite hawkish. It wasn't. It was pretty much as we know from the last FOMC and what Powell's been telling us. Yes, there were worries about the potential for inflation being sticky, but I'll read this passage out to you and it gives you the general gist of it. So this is straight from the minutes themselves. The participants noted that uncertainty about the economic outlook remained elevated and agreed that policy decisions at future meetings would depend on the totality of the incoming information and its implications for the economic outlook and inflation, as well as for the balance of risks. Participants expected that the data arriving in coming months would help clarify the extent to which the disinflation process was continuing and product and labour markets were reaching a better balance between demand and supply. This information would be valuable in determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. Now, the TLDR, too long didn't read, version is we're data dependent. That's going to drive hikes. So I saw nothing more hawkish than we knew already, as far as the press has been spinning it. And I just wanted to highlight that, just so you know what the actual lay of the land is compared to how the press have been spinning it. I don't know if you got into the minutes, Kay, if you noted anything there yourself.
Well, I read the first word and the last word, and we are data dependent. And it's not only okay. The press influences some traders at least. I think it's constantly that the market or the media or the financial markets are constantly looking for a pivot indication, or that it's enough, and that and every time they're getting pushed back. I didn't see anything in those Fed minutes that changed anything to my view on what's going on in this market. Nothing, zero. It should have been a non-event. And actually, if you look at the actual facts, and if you look at the dollar reacted a bit stronger, but we were already strengthening in the dollar. It's just a continuation, and people trying to fight it, getting their stops done. And I must say, I mean, it should have been a real non-event, and in the actual letter it is a non-event, but it just means that the market is continuing to do what it does, and that is in a way buy dollars and sell the weaker ones, just like the antipodians, the commodity, the Scandies and stuff, and then you see the US block doing a little bit better on the back of it. Well, that's really the only thing that I saw from there, is that some people expecting again that we are seeing cracks appear everywhere, and they're just not. It's a normal process that people start to think that we've done enough. We're at 5.25%, 5.5% from zero. There is a day where this will stop. Of course, this will stop. But will it be enough to say we need to go and pile into bonds and pile into stocks and sell the dollar? No, I haven't seen anything of the likes.
Yeah. But as far as the press are concerned, you know, you're never going to see Reuters print or Bloomberg print a headline saying FOMC minutes completely boring and no different to what we heard 2 weeks ago. They've got to get the clicks. They've got to sell the subs. So they're always going to pick and choose the headlines and cherry pick something that might get markets moving. Such is the way. But then sometimes that can give you an opportunity to trade a counter trade. If you read their headline, it invokes a market reaction. You read what actually is in the detail, and then you can have a fade. We've both done that quite often, haven't we, mate?
Yeah.
Yeah. Headline. Yeah. Right. That's all I've got on the news front and bits and bobs. I don't know if you got anything additional, Kay.
Well, you were talking about. You put something on there, and I've seen it in the press as well. Been reading about this stuff that BAE bought an American company for about $5.5 billion worth, is it, or pounds or whatever?
Yeah.
And well, we are fishing a little bit as to whether the FX component may be going through today. It's just fishing, right? It could just be that sterling is catching up a little bit on the dollar, and that euro sterling found a little bit of a bid around 85.40. It could be just a coincidence. It could be that those flows are partially going through. We don't know. Even if it's an all cash offer, we don't know whether it's done via options, whether it's done via straight FX. But we are a bit fishing, so that may weigh a little bit. We have seen into typically hourly, into the hours, that sterling got sold a little bit. If that's the case, then it should all be over come around noon, I reckon, because they would likely do it into the noon UK fixings. And then we'll see whether there's the real market stands up again and buys sterling again. That was in the news. The other thing is that in Japan, the companies are already moaning about Bank of Japan potentially changing its monetary policy too much, because they are afraid that they are not going to be able to raise cash so easily. So as we know, the Bank of Japan is extremely is a central bank which is extremely independent from 10 p.m. at night until 6 p.m. in the morning, and then the rest of the day probably listens to whatever all the politicians and big companies have to say. So I think that gives us an idea they are not going to be moving fast either over there. And the last thing, and that's something for next week, but we are going to have to keep an eye on that, is that there is an extended BRICS meeting to take place next week. Now, again, writers, commentators, analysts are saying, talking about moving away from the dollar. No, let's not go into that. But an extension of the BRICS organization, which could mean that countries like Saudi Arabia may be joining, could potentially be a big thing. So for next week, we should not just forget about it. We'll have to listen what comes out of that meeting. It's from the 22nd to the 24th of August.
Yeah, and that leads nicely into Jackson Hole the following weekend.
Exactly,
so,
exactly.
Yeah,
which is right after 24,
yeah.
26. And I guess
Yeah.
that's not a coincidence. They are doing it 22nd, 24th.
Yeah, get in early, get their thoughts out early, give them lot at Jackson's Hole something to talk about. But yeah, that's for next week. Just jumping back to what Kay was saying about this M&A deal. This is it here. UK firm BAE snapping up a US firm for $5.5 billion. What that can do sometimes when you get headlines dropping like this, you can see a quick reaction in the relevant currency pair, so in this case cable, because the market sees a headline of that and thinks, oh right, we'll go and front run some of that deal by selling cable, because obviously supposedly if it's a cash deal and if you're taking it at the basic level, BAE would need to raise or need to get $5.5 billion to buy the firm. Now obviously they're going to have cash reserves in dollars and whatever, and it's not a straight cash deal. But sometimes, we haven't seen too much of it recently, but in the old days, you get a headline like that, you'd see cable making a sharp move as that headline hit, and everyone jumps in. Again, it can give you a little bit of an opportunity to try a fade if it goes against what the market's been doing that day anyway. But I had a look at this chart this morning. I couldn't see anywhere perhaps where that might have been an impact. But as Kay says, what they might be doing is doing some options, or they might be working stuff around the fix. If someone's been given an order to raise dollars for that deal, they may spread it out over the day. So you may see things happening around the hourly marks or the fixes or something like that. But yeah, M&A used to be quite a big feature in market moves, but not so much now, because again, people keep it secret and they spread it out and they do it different ways. So not always can we see the impact of that, but just wanted to highlight that story for you. Anyway, I had to get shot of that. Just I want to bring up, got some decent expiries, and what I've noticed, and I know you've picked up on this, Kay, we've seen a bit of a pickup in euro pairs, and particularly euro sterling's had some activity this week and last week. A lot of it's not close to where the price has been, but is that suggesting that people are maybe getting a little bit cautious about the euro, and they're starting to put on more options to cover, hedge, and protect?
It is possible, but on the other hand, it's been very quiet. So since the vol is starting to come lower, we should be seeing actually higher notionals, because people pay less to do bigger amounts. What it does, okay, these ones are a bit higher in the euro, and I highlighted that on I think Friday evening, that this week would still see quite big interest in the euro dollar. On the other hand, having so much expiries very close, very nearby, tends to keep stuff in ranges. So it actually suppresses volatility even more, and that can be typical for what we see over summertime as well. Protection, just looking at those, I think those euro dollars up there, I don't think that that they are protection. I think that best part of them were already in there, because I saw some biggies around 110 last Friday as well into this week. So I think they were already there.
Yeah, I mean, euro dollar is always usually busy. I'm more thinking about some of the crosses, like euro sterling. You'd be lucky usually if you get 400 million a week. Just the last couple of weeks, there's been a few billions chopping around here and there. It's been a bit of a pickup. We're seeing a big, decent number in euro yen. It's just one of those things, it just tickles the back of your mind to say, well, hang on, this is a bit busier, like euro sterling, a bit busier than it has been usually. Just. I mean, I like to keep an eye on it.
It could also mean that we are getting closer to levels that have been put up earlier, and when you start to break levels, like for instance in dollar yen or in euro yen and stuff like that, usually people who don't want to pay up, they can start to buy options. Yeah, that was one that I talked about in the room as well, the euro sterling at 86. And actually, we hung around until right after expiry, and then we started to slip a bit deeper. So it's also people who may have missed the move, or starting to have protection in, because they have it can be anything, from asset managers to corporates to whatever, who are playing in the options market. And I can imagine that in yen pairs, for instance, there may be some options on to the top side, because they want to be importers want to be protected, or asset managers who invested in the Nikkei want to be protected, and stuff like that, And so if you start to break levels on the FX, or seeing like pretty bigger moves, you can see an increased activity on the option side as well.
Yeah, and I'll just give you a little sneak look there. This is on our dashboard that we put up the option expiries each day, usually the night before. We go through, stack them all up, see what's about, gives us a little bit of a look at what might happen, the following day in the price action. If we've got big expiries around the current price, for example, today, not a huge 1.46 billion where we are now in euro dollar, but if we get back into the 109s, we've got some decent lumps up there. As I say, this is done on the platform every night, usually, or first thing in the morning. So if you're on there, if you're in our chat room, you can check that out. Right, let's have a look at some of the prices. I'm going to go over a couple, just mainly things that I'm in trading at the moment. Dollar CAD, we finally got a break of 135. This was a lot of us pulling up the chairs and popcorn, getting the popcorn out, watching this one yesterday, wondering whether we're going to get a proper break. We finally did. Ran up to my next resistance area. Let's go to that one. Up at 135.5, bit of an on-off level, more a watch level than anything I would particularly trade. So now we've got a bit of a battleground between there and 135. We need to hold this break, obviously, to keep this move going. But we also need to crack 135.50s now to continue higher. So what we do between here could be the decider for whether we're going to continue or whether we're going to put in a little bit of a pause. If we're back below this zone, i.e. we break down to 135 and in the bottom of this zone, that might suggest that we're at the end of this run for now. We might be seeing a bit of a pause, and it's going to make the top side a little bit harder to happen. It has been a pretty strong run. There's no denying that. So you may have called this a decent pullback, a decent refresher. When we first hit 135, came back to under 134. We'll have to see whether this is refreshed enough that it's going to continue higher from here. Obviously, keeping half an eye on oil. That continues to dip. And funny enough, Citi have come out this morning to say, advising people, their clients, to sell oil, get short oil. They weren't happy that it was they could sell it up at near 85. They want to sell it when we're back in the box, and look at that, we've hit support and we're bouncing. So they're trying to get short at the bottom on this one. Let's see whether they're right or wrong about that one. Another asset trading here, S&P also making a break. I've got so much in here, I need to know where it all is. Got the break at this 45 area, this whole zone really. It's confirmed, got up to 50s, then we've confirmed under this 45 area. Got to push down to the big figure, a little nose under it. It's finding a bit of support here at the moment. I had a small minor line around 44, 10, 09, 10-ish. Again, nothing I would trade, but just picking up the levels where something may happen. For me, 43.80 is the big support level if we can get a move under the big figure. What we need to do is retake this area here. There's probably a bit of resistance going to be seen around 30, 35, just on the back of that's where these lows were. And we've had half a bit of a move there back up to 30, and it resisted. So that's an area to keep an eye on initially before we get a move on towards this 45.60 zone again. We need to get above there really to take the pressure off. The only thing I would comment about this has been pretty orderly, this move down, you know, dips, bounces, keeping the trend lower. This one here is a bit stronger. So what that may indicate is that we've had a bit of a pressure release, if you like, this move now, which may mean we're going to find a bit of sideways action. We might not be heading lower, you know, in the next session or two. I hope we do, because I'm still short. But I wouldn't be surprised if we see a bit of sideways action now if this has let off a bit of steam just while the market gathers its thoughts again. But yeah, if we get a move lower, it's going to need to get under the big figure and hold under there. Get that, and then we might be getting the 43.80 and see what it wants to do there. Euro sterling as well. As you know, been keeping a big eye on this one. We've had a move under my level at 50. Again, just one of these on-off levels that is happening. I know Kay's got his support down at 40s. I'm not going to argue around 10 pips. While we hold under 50, though, the pressure is on for a move down to the low 85s. I am in a little long off of 50, 53 here. Just wanted to play the level, not looking too hot at the moment. I'm keeping it really tight on this one. I'm not going to give it much room. I'm more interested in what happens down at 85 if we have a look down there. But like this, you know, again, minor level down at 70, bit of a pivot level. We came down, held it for a bit, broke it. Now we're holding it as resistance. So typical price action when you get break. So we know we need to get above this area if we're to take the pressure off the downside. To do that, we'll probably see 85.50 coming in as support again. But from here, wouldn't be surprised if we get a move down to the low 85s. And we know what we need to do if we're going to turn that around. Kay, do you want to grab the screen and go over a couple?
Yeah, I'm just this while we're on the show. There's a bunch of PBOC headlines coming out, and it does appear that they've sent the submarines back into the market to sell $1. They were talking about a prudent, but forceful monetary policy. There's really a bunch of, but then they did confirm now that China told the state banks to escalate yuan intervention this week. So we've heard already about that, but now they're coming out with it officially, and $1 just got sold for about 200 points there while we are on the flow show here. So a bit of an interesting development. I can grab the screen if you want.
Yeah, go ahead, mate.
So here, just going out from the more wider one. Yeah, so we were hanging around the highs, and we just had this this pretty sharp move lower. It didn't do much for as long as the They were just babbling, but right after that, and the headline came out, they are seemingly now getting more serious about the interventions to actually try and stop this the rot in dollar China. So we're going to have to be looking at levels here. I think the prior high, and then here around 727. This is your zone here that really should hold if this isn't over yet. Okay, it can hold already earlier, but really this is going to be the major zone if they manage to set it lower again. I think for the time being, it's just a lot of jawboning. I don't think that the Chinese yuan will strengthen on its own. It's going to take interventions because in the meantime, they are continuing to inject liquidity. And we have next Monday, the LPR, loan prime rate decisions. And they are supposed to be lowering them. So keeping a close eye on what's happening in that dollar China. And yes, Horatio, that is definitely why stuff like the Aussie and the Kiwi are bouncing a little bit. We're seeing the crosses as well on both trading lower. So that is going to be definitely a driver, because it's been a driver on the other side. If China decides to put a stop on the China weakening, then it should be supportive for the Aussie and the Kiwi, of course. I'm just trying to run through a couple of the Ali. I think Ryan did that. I think at which level to sell this pair. I know it's a bit away, but I don't see any decent resistance. Well, I mean, the intermediate one is around 85, 70, 80, but then it's probably going to be more like the decent one is going to be 86, 15, 25. Reading through the rest. I think chat room. Ali, join our chat room, mate. I mean, there's a lot of questions in there as well. Let me quickly run over to
just before you flick over. Well, two quick things. Horatio, I did correct Blake in how we pronounce your name yesterday on F.A.C.E, so don't worry about that. Got you covered there. Dollar China. I'm wondering if maybe this has put it into rally sell mode for the short term, a bit like when we hit that 728 and they came in with a jawbone in. I might be thinking about taking some quick shorts in this one if we get a bounce back up.
I think if you look at the more longer term, of course, if they intervene, they are going to put it lower. There's no doubt about it. But if it's a rally seller, it's quite something, I must say, for the short term, that they don't let it go to retest the October 22 high so far. So that, I think, is going to be the big one, and it does look like they don't really want to get it there too quickly. So we are going to have to be a bit careful with that. Of course, if you want to sell rallies, I mean, and you can lean against that prior high, right? Two interesting ones on the Aussie and the Kiwi. Just have a look at this. I've actually bought mine back on this drop. I left an order in overnight. I was lucky for some that the Aussie came lower on the back of that weaker report. I also think there's a bit of a trendline support coming in, really not far from there. That's rather in the 63.5s. But so now we're seeing a little bit of a rebound on the back of that China thing. First of all, and we're around there. This was your prior low, and then we went down there. But I think anywhere between 64.30 and that prior low here is going to be your first zone to monitor whether there are already sellers on rips to get back into the market. So that's your first thing. For the bigger reaction to what we are seeing here, we are going to have to monitor what happens into the low to mid 65s. Okay, for the time being, I think this is still pretty powerful, but we can't exclude corrective rallies from here, I will say. And I want to be cautious, and I did the same in my process. Also, if you look at the Kiwi, if you look at this move from October 2022 to February this year, we just tagged the 61.8 overnight, and that channel trend line also comes not too far from there. So we have a bit similar setups in both the Kiwi and the Aussie. Yeah, both still negatively oriented. For as long as the Kiwi stays above 60.25, I don't think anything changes. Call it even 60.5. But we can't exclude corrective rallies, and that's what I'm a little. That's roughly what I'm thinking about today, that we could see those develop at some stage. In the meantime, though, keep an eye on those yields. They are still moving higher, and we are going to see the similar things back in those euro and sterling crosses versus the antipodians. We had a shoot over the top, and now we are trying to correct. Okay, if we get back below 182.25 in the euro Kiwi, there may be some more corrective activity going on. If you take euro Aussie, if you look at that here, we're doing the same. We're trying to get above that, which we briefly did early. Hang on a minute. Yeah, early in Asia, because of those Australian numbers as well. But we are starting to correct. So keep an eye on those ones. I'm just saying this is it's not going to be a one-way street. Dollar CAD is into my traffic zone, so I'm going to be a bit cautious on that one. I was going to show something. Yeah, the Noki we spoke about, right? And we are ping-ponging in between this one, which is a 50% of the correction. 11.58 on Euro Noki, just blew above it in during the dead hours in Asia, where there's not a lot of Scandinavian currencies being traded, and now we are, after the Norges Bank, we are ping-ponging just above the support zone. 11.47, 46, 11.50. That's your zone that you want to watch on the Euro Norway, if that is your currency that you want to trade. Dollar Norway shot up to that trend line, overshot the 50% of that move, and now we are trying to come back below, but we're still turning around. To really start to reverse, I think we need to break under 10.50. Okay, if not, there is a possibility that we are going to go into the 10.70s at some stage, but we'll this is a bit of an open play now. I'm starting to get interested in the Norwegian kroner, just to monitor it, you know, because it's done a big move, and the Norges Bank doesn't seem to be overly happy about it, because it can influence their monetary policy, as they say, on their statement. So I'm going to keep an eye on it. And Ryan, for me now, that is it for today.
Thank you very much. And yeah, just going back to Ali saying about his strategy for riding his wins. He takes the position. If he wants to ride it, some portion, he simply turns off his MT5 and goes somewhere and doesn't watch the trade. That's one way of doing it. I'll give you that, Ali. If that works for you, mate, then all the power to you. It can mean that you obviously don't do anything silly under pressure while you're watching the price, but you need to work on that. You should be able to sit in front of your screen and watch a trade and not panic about what you want to do with it. If you've got a plan, stick to your plan. So while I say, yeah, it's a solution, if it works for you now, then brilliant. But now you need to work at being able to sit in front of your screen and watch your trades, because it does give you the ability to react to something if it happens, for good or for bad. So yeah, don't hide. Learn to deal with it. But if that's what's working for you right now, then go with it, mate. Right. Oof, I think we'll call that a day. What have we got coming up? Initial jobless claims and Philly Fed gives us a second look at manufacturing for the new month of August. So keep an eye on that data. And yeah, thank you very much. Thank you very much, Kay, for all your valuable insights as often. Keep an eye on those $1 headlines dropping. Yeah, thanks, mate. And thanks to all you viewers for coming to the Flow Show. We will see you all bright and breezy tomorrow. Thank you.